Did you already meet him?
Yeah, I walked right by him when I came in.
Wow, that was rude.
I didn't know who he was.
Yeah, I thought so too.
Yeah, but when you walk into a room, don't you automatically?
I gave him the nod. Like I said
Did he
hi
give
to the
you a
whole.
nod?
I said hi to the whole room.
He went like this to me.
Yeah.
And that was it.
This is how I nod.
Don't you when you walk in a room? Do you actually say hey and give eye contact, or you just do what he does? Yeah, I don't have time for you.
I always say hi to everyone. I always say hi to everyone in the office.
You don't. You're like
wherever I am, I just say hi.
I kind of like look where I'm going and just kind of say hi.
Small talk doesn't work for you?
No, I'm not a big small talk person. Like I kind of want, he could be a client of theirs. What business is it of mine to start yapping to this guy? I don't know.
Now, when you go into a grocery store, do you do this?
He's totally making that shit up. I didn't do that. But that's in essence what I did.
What did you?
Was kind of just like breezed on in,
And breezed on out.
I saw him there. I didn't
know. Okay. Well, this is Yale. Yale Wolf. Yale is a loan officer. Do you like the title of loan officer?
I appreciate it.
Yeah.
I do. I like lender a little better.
Do you?
Because
what's the difference from loan officer and lender?
There's really not much to it, but being a lender seems a little bit more, I want to say acute to what I do.
What's acute?
Meaning like right on
sharper.
point, like sharper what I do. So,
what about
there's 1,000, because I wouldn't be a banker, because a banker, I'd be sitting in a bank and I'd be doing banking. Lending is...
And he's a lender and he's lending.
But don't you guys have a banking license? That's what confuses me.
No, I do not have a banking license. I have an NMLS number and I have state licensing for all the states that I lend in.
Okay.
Where a bank is a nationally chartered type institution, so you don't need a license to lend.
Good to know.
So the loan officer or lender, we'll call it loan officer in there, is a little bit different than what I do because they're not licensed to do it. They're just in there taking applications essentially.
Okay. So that application would end up with someone like you.
What's that?
That application that they're taking in would end up
with someone like you? Them.
It would.
So you're having someone that may not have the same knowledge as a lender out there. Of different products because they're only used to what's in that bank.
So is it like realtor and agent? Like if you're a realtor, it's a different category?
Yeah, it could be.
So when people reach out to you, do you actually say, oh, I'm a lender?
All the time.
Wow.
Because they ask me, do you work for a bank? And I say, no, I'm a direct lender. And what is that? I go, well, I can lend my own money with my institution, but if there's other banks out there that have better rates or better programs for what you're qualified for, I can go to those investors or banks to get a better deal for you.
That's something I didn't know.
Makes total sense. How do you guys decide like which program? Like some lenders will do VA loans and some don't, for example. Like as a home inspector, I can offer some support to VA lenders by doing pest inspections.
Yes.
So when I run into a lender, it's like one of my questions, like, hey, do you guys do VA loans? And I'm surprised at how many don't. Why is that, do you think?
I think it's short-minded to not do VA loans, to be honest, because one, I support all veterans. My father was a veteran. I sit on a foundation, the Launch Foundation, which is home for veterans. So for me to think about people or banks or anyone not doing VA loans, I think that's doing a disservice to our veterans. So I think there should be all products out there for all people, especially veterans. That's just how I feel. I feel strongly about that. What a lot of lenders or banks don't want to deal with the VA loans is all the extra work, they call it, meaning the inspections, the pest inspections, the paperwork. You have to, just like an FHA loan, you have to register the appraisal with the house.
Like it sticks with the house.
It sticks with the house. So there's a lot of like extra paperwork that goes to them, but the program is amazing for them, from 0% down to renovation loans to all sorts of stuff.
Before we go any further, though, I just want to introduce Yale so that our listeners can understand where we're going to go deep diving with you. So we're here with Yale Wolf. And Yale, give us about like 15, 30 seconds of who you are, how long you've been in the business, and tell us a little bit more about yourself.
Sure. Well, I've been in the business 24 years.
And who do you work for now?
I work for Guaranteed Rate Affinity, which is a subsidiary, you call it, of Guaranteed Rate. So Guaranteed Rate has many arms from GRI, which is Rate. You'll probably see them around, or their marketing. We're the same company. We just have an affiliation with Compass now. Because Coldwell Banker was just, or Anywhere Real Estate was bought by Compass. So I've been in the business 24 years. I've held every position within banking, from running a lending team at a community bank, to underwriting, to processing, to working on the secondary market, packaging up loans and mortgage-backed securities to be invested in the secondary market. So I've seen every aspect of this business. I always joke that this is the best second career of my life because I wasn't really supposed to do this. I was an asset manager for Oppenheimer on Wall Street for many years. And then I fell into this because something drove me to helping people in a different way.
What drove you?
It was like helping people understand they can do something that they thought they couldn't do. And the American dream is owning a house. So why not show them how to do it?
Yeah.
You know, and some people think they can't do it, but there's all these things available to them. That really drove me to understanding the products more, understanding the institutions that do the lending, you know, community banks, everything, every aspect of it. I'm like, I think I can make this better or make it easier for people to do it.
Do you think it was hard to bring a resource to the table for people, like to really understand that there's so much more to it than just finding out whether you qualify and to get a mortgage and whatnot?
Well, one of my niches that I really, really hang my hat on is educating my clients, but not just the clients, but also the realtors or agents that I work with. At the end of the day, I am promoting, my expertise, but also I'm promoting the realtor's expertise because we come as a team, you know, at the end of the day. I'm just trying to put it in the best words as possible that, you know, when you start educating clients, they become clients or buyers for life. And that sort of relationship sort of garners itself and the web just grows. So yes, I educate everyone, you know, on the process. So this may be the first home, but there's going to be many others. So I really, you know, we laugh about it, but it's true. There's some sort of housing event that happens with everyone within 5 to 7 years. Yeah. Either it's a refinance, a baby, you know, maybe they want a bigger house. You know, it's always 5 to 7 years. So why not put your best foot forward first and show them that this is possible and easy? Yeah. I always say like the easy button. There is a lot to it. I try to take the stress out of everything. The anxiety of buying a house. That way, all they need to worry about is just getting me the documents, follow my timeline that I put in place, and everything will happen.
Do you think it's easier for buyers now, or it's the same, or it's harder to get qualified than it was when you first started? And I mean, is it easier, kind of like the same whole thing?
So what I love about my industry, what I love about real estate and what I love about lending is that every day is different. Guidelines are always changing. Home values are always changing. Something changes. So you have to be a chameleon to that. But when it comes to the process is always the same. All right. However, the technology changes, which makes it easier for both parties to get qualified.
I hear things like credits, right? Credit scores and stuff. And when you are talking sometimes, you'll say things like, I got this person qualified with a credit score of X. Like, this is great. You got to, explain this to your buyers and stuff. So credit scores are always been important, but they're not always important sometimes, as important as they were before. I mean, I remember talking to people, so I've been in the business 24 years as well, and talking to people, and they have like really low credit score. And they couldn't qualify. But now there's a lot more help for that.
Right. So picture, what's the best way of putting this? So guidelines and qualifications sort of change with the tide. When there's more risk in the market, there's less chance for that low credit score to qualify.
Makes sense.
When there's less risk, that means banks and investors are willing to take a chance, so therefore the guidelines change.
Where are they now?
So that's a great question. So they have changed where it's a little less risk adverse. However, what you have to have is compensating factors. So if you have a low credit score, you got to have assets, you got to have good income, your ratios have to work, but it's possible.
Okay, that makes sense. There was a thing that you said, and I don't even know how to ask this question.
Sure.
But I've never met anybody who has experience in the secondary market, packaging up mortgages, and you're essentially acting as a conduit to selling them to investors. Can you summarize what that means? Like,
sure.
What does it look like behind that curtain?
Sure. That's a great question. It's actually more exciting than what I do, to be honest. The way it works is everything has a risk, and there's a buyer for everything out there. Okay. So the loans that are less risky are going to have less return on them. So investors who are investing in these know that their return is going to be less than taking on like a higher risk. But the game you play and the behind the scenes is that when you are packaging up these loans to sell on the secondary market, you're going to put a package together with a risk level where you're going to add some riskier loans to the low risk
Just
loans.
kind of sprinkle them in there. Like can't all be gravy.
Right.
Okay.
Sprinkle them in there, which brings up the return on the investor on the outside, knowing that there's a few in there that are not perfect loans. So it makes that package more investable than something that's, just perfect. But also what you have to realize is not only that risk, equates to something, but also interest rate does. So when you are investing in mortgages, MBSs or real estate investment trusts, whatever you want to call it, there's a risk of refinance. So if these loans refinance, you stop earning money.
Oh, right.
Because they're not part of that package.
They're not part of that portfolio anymore.
That's right.
Interesting.
So if you have lower interest rate loans, no one's going to refinance out of
Then that's where we are at.
And that's where we're at.
I'm sitting on a 3.75. Like,
you're not going.
Why the hell would I do anything with that?
So the people that are investing into those, they're making some great money right now because nobody is moving out of those portfolios now.
It's like an annuity. You're not making the best money.
Like
you're just
money.
making
making money.
But the thing is, if you have clients, well, I'm not going to call them clients, investors that invested in ones that have higher interest rates, the short term on that is a higher return. So it's not the long.
Right.
You're not playing for the long game. You're playing for the short game.
Right.
Yeah.
So you're going to pay for those at a premium opposed to a discount. So you're earning back that money. So these mortgage-backed securities are considered bonds. So a bond at par is at 100. 99 would be a discount. 101 would be at a premium. So these people pay a premium to people like me who package these things up. So we make that premium and we're out.
Is there like a standard number of loans that are going to be in that package?
No.
Like a package could mean...
Could be anything.
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 Huh.
when you have the large institutional, investors, they're larger packages opposed to just the onesie twosie small, like mom and pop type.
So like a local credit union might even have a package to go into the secondary market,
That's correct.
but it's probably just
it depends. So a lot of
laundry basket full of them.
Right. So a credit union has their own guidelines. Sometimes they don't follow the GSEs, which are Fannie and Freddie and Ginnie. So if that's the case, then they can't be sold on the secondary market.
They have to hold them.
They have to hold them.
Okay.
So that's why you see like these credit unions not really lending as much as they did in the past. Because when to take this a step further, they borrow money from the Federal Reserve, okay? Now, you have a choice when you borrow money. You can do it on a variable rate or you can do it on a fixed rate. Mm-hmm. Now, the smart people, when the rates were lower, borrowed on a fixed rate. Mm. The ones not so smart borrowed on a variable rate. So they use that to lend, but they also leveraged their deposits to get more money from the Fed. Now, in an environment that we're in right now, the banks are losing deposits because people aren't making the money they had, or they have more expenses because of inflation, or life happens. Now, the variable rates they borrow the money at, they keep on going up and up and up. And that's causing them to slow down the lending or charge higher interest rates to make their margins to keep the lights on. And they're losing their leverage to borrow more money.
Right.
So that's why you see some credit unions right now not writing like home equity lines of credit, because that's based on the Fed rate and there's no margin for them anymore.
Quite a world, man. It's always such a mystery to me how this stuff actually works, even as you're explaining it. I'm understanding some of what you're saying. Right. And then there's still this giant mystery behind the curtain to me.
There is. The thing is, like, there's a lot of mystery to it.
What was exciting about it? You said it was exciting.
Because you talk to all these people. You're talking to other people, talking about big money. We're talking about millions upon billions of dollars, opposed to, for example, me talking to someone about a $300,000 mortgage.
Right.
A one-off. But now I'm talking to institutional investors, which is like a totally different game. Huh. That's like IB. There's investment banking at that point.
Okay.
So it's a different game.
Yeah.
Different dollar amounts, different income levels, different knowledge.
Well, and different energy.
Yeah.
Yeah, I would imagine.
I mean, think about it. They're fast paced. They're probably really fast paced.
A lot of tension. A lot of tension. I wouldn't call it stress.
No.
It's tension.
Mm-hmm.
Just because of like the stakes.
It's not even about the stakes. It's about you have to make a certain amount of money on everything that you do if you're going to be packaging these things up. But you got to find the right investor, right relationships.
Neat.
And then there's another part of the game, which is the servicing part. And I know we're going down a rabbit hole, but
I think we like rabbit holes.
Okay. Well, there's another part of this game. It's called servicing. So we all have mortgages, and we all know that they're serviced by a servicer. Mm-hmm. Now, how did they get to that servicer? Do you all know how it got there?
No idea.
No.
So there's something called service release. So what happens is your lender or bank underwrites the loan, and service release underwrites, closes the loan, and service releases it. But they get paid. The service release it. So they'll get paid 125 to 150 basis points on the balance of your loan to service it. Now, here's the kicker to the whole thing. You can service release your loan to one of the largest servicers or a bank or whatever. But as a lender or a bank, you can subservice that loan for the servicer and collect 25 to 35 basis points on the balances of your loan.
So they're technically doing it, but you're doing the work and taking some coin to do that.
Correct.
That's bizarre.
So that's how that happens. So when you see your mortgage go from servicer to servicer, they're service releasing your loan and getting paid on the balance.
It's like someone leasing an apartment and subletting it.
Yeah.
Is that kind of what you're describing here?
That's correct.
Like, I want to see if I got the structure right.
Yeah, that's right.
That's wild.
That is. And so like if you look at like large lenders, guaranteed rate. You look at Rocket Mortgage is a great example. Most of the cross-country mortgage, you've probably heard of cross-country, they have huge servicing portfolios. And that's where they're making most of their money. Because they're underwriting the loan, they're closing the loan, such as guaranteed rate. They're making on the front end, but then they service release and subservice that loan. So it's housed at another place, but you're doing the cash management. So you service release it, say, for 150 basis points, and now they're making 35 basis points a month on each loan.
Does that translate to real money? I don't know what a basis point really translates to.
Billions of dollars.
Sounds like a lot of money.
So that's the real game.
Interesting.
In this whole scheme of lending and banking.
That's the real scheme?
I would call it a scheme.
Yeah.
Because there's always a different angle, a different layer, a different everything when it comes to
and we just think we're just borrowing money.
Right.
And it's a brick and mortar.
Yeah.
Seriously.
Not that simple to us.
It's not, and that money just
it is mysterious.
Recirculates. It comes back into the system. That's how the banks keep on lending more money.
Yeah.
That's how the lenders keep on getting more money, and and then they're making money, and then they can offer a better product, and then they can have better service, better technology, because they're reinvesting in themselves. And when you're dealing with the larger institutions, they have that to do that. That's why they're outpacing the credit unions, the regional banks, because they have the money to increase.
And they're smart enough to reinvest it.
That's correct.
And build a system that nobody can touch.
Correct. Like Guaranteed Rate has their own proprietary systems, and all of our underwriting right now is run on AI.
Whoa.
So if someone goes on my application, applies, I can have an approve. The system will approve them for the mortgage right on the spot if they upload their documents without even looking at it.
Does a human ever need to review what the AI did?
Yes.
Okay.
There's checkpoints. But what it does, it's an insurance policy for the underwriters. Because if the system checks it off, that means it's a sellable loan. And now they're just checking the documents to make sure these are accurate to what the system is reading. So it takes underwriting time from, say, call it 2 hours, 3 hours a loan to 10 minutes.
That's nuts.
That's why
Very
Guarantee
smart.
Rate is able to close loans in less than 10 days.
This has changed a lot. I mean, I was an agent 10 years ago.
Right.
I think I stopped doing that.
Right.
And way different than what you're just describing.
Yeah,
What's your average? When someone goes in and says, "Hey man, I want to borrow money," how quick do you get them set up where I don't even know what you're doing now? I mean, are you still doing a traditional pre-approval, so to speak, or are you just basically clearing them to close fast? How does this work
I
now?
do a traditional pre-approval. However, it's much faster because they upload their documents. My system reads it. I then go over it myself, run it through my underwriting system if the system didn't do it yet. So something that would have taken me 2-3 hours to do takes me 15 minutes.
I think the cool part, though, is that piece is helpful, but you also brought up the fact about education. So even though we go, oh, AI, that guy doesn't do anything, right? Well, he's doing something still. He's still looking at the platform, still making sure that loan program might be the best, because he might be looking at something and saying, you're a veteran. You're this, you're that. Maybe this program is better. I think what you're doing is doing the stuff that took so long, but you have more time to educate and more time to go through it. So I hear more and more lenders are taking the time to speak to the people because all they're doing is uploading. So on my end, when I talk to a new buyer in a consultation, I'll say, oh, did you talk to a lender already? Yes. I get my pre-approval. What does it say? They don't know what it says. Then that person didn't do their job, right?
Yeah, they didn't explain it to them.
Oh, you want me to read it? Oh, here they'll go. Here's my paper. I don't know what it says. What does it mean? Break it down. What's your closing costs? So you have to find the right lender that's going to take that time to explain it, because it's not just what you qualify for, it's what you got to pay out of your pocket.
Yeah.
And so the closing costs are really important. What you're going to put for a down payment, and then what does it ultimately mean that you're going to be paying on a monthly payment?
Yep. I feel like that's the theme throughout this whole industry. Like everybody that has a contact point with somebody who's buying real estate, at some point when they get really good, what they're really getting good at is summarizing a ton of information succinctly or acutely, as you might put it, for that individual situation. And like, I don't think you can replace that. You need a ton of experience to be able to just sum up a person's issue, whatever it is that they're trying to do, and say, this is what you need to know.
Well, I think that's why, for me, there is a ton of lenders out there, right?
Yeah.
And they all want some business. But if you are working on the level that I am, and I know you are, you like to educate the consumer, then you're finding someone that's that team and partner. But there's a ton of them, and you can still go find somebody, and they'll say, I've been in the business X amount of years. I know what I'm doing. I can do all this. But they don't spend the time to educate. That's a huge difference.
Yep.
Because I think when they spend the time to talk to the individual consumer, they'll find other things that can't be found in those documents.
100%.
Right?
Yeah.
Correct.
Right.
Yeah, you're going to find opportunities there, or you're just plain old going to make them comfortable with,
Yes.
like here's where you're at. Here's what this can do for you.
Right. It's just very hard these days because people build trust. This generation is a little different than my generation.
Can you tell me the generation you're talking about, though? Because
I would say Gen X's, millennials.
Okay.
Okay. Go ahead.
I have a classification. Maybe this is what you're trying to say.
Sure.
People who know what phone jacks are and people who don't know what phone jacks are.
Okay.
Like there's people now old enough to buy houses that don't know what a phone jack is. And I got a spidey sense that might be the generation you're referring to.
Right.
I don't know.
Right. The thing is they build trust online.
Okay. Yeah.
All right.
That's true.
Right.
Where I'm more of, I want to meet you. I want to talk to you. I want to see you.
Yeah.
You know?
Because you can read people too.
Right.
And you can, there's a big difference about having consultations on the phone versus virtually or meeting.
Right.
So I think technology having virtual has been very helpful, especially when people don't want to come to the office, the brick and mortar.
Oh, that makes sense.
Right.
Yeah, you can probably do a lot through Zoom.
Oh,
and
100%.
Do you feel like you can accomplish what you were just describing through Zoom?
You can, but not the way that I want to do it.
Okay.
It's more like that's my last resort. I know many loan officers out there, they're on Zoom calls all day long, but that's not efficient for me to do that. Yes, my systems are in place where I can spend the time with clients, with realtors, doing podcasts. I don't have to be behind a computer and sit there all day long.
Right.
My biggest thing is educating people because there's two types of loan officers out there. There's ones that are after transactions and there's ones that are after relationships.
Yep.
Okay? And it didn't take me 24 years to figure that out. But you have to understand the client. You got to understand your teammates. You got to work hand in hand with everyone. You need to educate all the time. When it comes to home inspections, when it comes to real estate, when it comes to financing, you have to keep on educating because if you educate someone and you have that connection, that means they're going to refer everyone to you. And then it's going to spread. Yep. And then everyone's going to be smarter and you're going to have real conversations about what's going on.
Well, you must see that as a home inspector, just on the same level as us. You have some consumers coming to you and walking through, and they're just like, okay, what are the things I need to know? So they don't really pay attention to your detail of maintenance of a property.
Sure. Some
right?
people don't want to know that stuff.
No, they just go, okay, so it's wrapped up. What do I need to know? Because they just want to know that little piece. Where it's the same with you. What am I pre-approved for? Right? That's all they care about. So like, oh, good, I can qualify for that. It's a big difference from people that know the phone jack and don't know the phone jack for sure. And even in my world, when you send a contract out, I just signed the contract. I didn't read it. You just signed the contract and you didn't read it?
You just told me that? Yeah.
I'm like, wait, what?
You just said that out loud. Okay.
Wait, no, I'm not sending this in, you know? So, yeah, it's like slow down, take a step. And they don't, that generation you're talking about, they don't understand the significance of take a breath. You're not going to lose it.
Yeah.
And to be prepared. We were talking about it in our office meeting. Somebody called and said, I need a pre-approval. I think Dale was talking about it. Need a pre-approval today. I got to put a deadline 6:00. We couldn't get a pre-approval that quick because you didn't upload documents. You didn't tell me anything, and I didn't have anything, and lost the house. But if we're prepared,
Yeah.
if we have preparation and we're prepared, sky's the limit.
Yeah.
When you really think about it.
Mm-hmm.
This definitely plays back to what you were talking about with meeting in person, because I do find with even people who don't know what phone jacks are, if they may not want to call me to schedule an appointment, they may not want to even text. They tend to schedule online, which I'm totally cool with because, hey, I don't need to answer any more phone calls either. I'm cool with that.
Mm.
But once they are on site with me, they are listening. They will get into the process. They will spend 3 hours talking about the house. They're not opposed to that.
Mm-hmm.
They appreciate it, just like every other human appreciates it. Being taken by the hand and shown what they need to see. Being in person is just valuable. It's really valuable. I can't imagine doing this job without that, on my end.
I like the fact that you brought up the AI, though, because I think it's really important that people understand that AI has a great impact there's some purpose for that.
Mm.
What other, what do you think is really important for any consumer, whether they bought and sold before, or whatever the case may be, when they reach out? What's really important is them just to realize have your docs ready, or is it really just important to have a conversation? What's the most important?
I think so. Every conversation I have, I always have this one line I say all the time. I say, catch me up on everything. I want to be on the same page. That's it.
I like that.
And they tell me what their story is, what they're trying to accomplish, what they've been looking at, what, there's another house, or they're looking to refinance, whatever they're doing, how are we going to get to where we need to get to? And that just opens up the door to having conversations to try to figure out where they fit in when it comes to loans and what's available for them. Because with me, you don't have to fit into a box. Okay? There's no box. There's not one rate. There's not one program for everyone. Everyone has different wants and needs and, things that will get them to the finish line. So me starting the conversation with them, catch me up on everything. Where are you at in the process? Gets me going.
Do you think they should have a fear of, and I'm sure you get this all the time, what's your rate?
Yeah.
Right? What's your rate?
A lot of people want to know that right off the bat.
For how many times, if someone asked me that and gave me a penny every time, I'd be a billionaire.
Billionaire, for sure.
That's a funny, sometimes it depends when you catch me. If I'm in a snarky mood.
That's true, okay.
If I'm Let's hear the snarky one, yeah.
They would ask me, what's your rate? I would go, what's your rate? I would say, what do you want the rate to be? I would just because there's not one rate for everyone. Everyone's out there shopping rates, but what they don't realize is you don't really shop rates. You shop relationship.
Okay. I understand what you're saying, but as a consumer and as a cheap in general, at the end of the day, once the loan has closed, let's say I use the lender out there, but they do manage to close the loan. It might drive the realtor nuts because it took a month longer than it should have. At the end of the day, if I'm paying that thing for 30 years, the rate does matter to me because it's all that's left for me every time I'm writing that check.
All right, let me just give everyone a secret out there.
Please.
Thank you.
All right. Everyone has about the same rate. Okay. It's about the cost of getting to the rate because everyone's borrowing money from the same place.
Okay.
It's the same margins for every lender. It doesn't matter.
Nope.
It doesn't matter how much you want to pay for that rate.
Exactly.
Explain that. What does that mean in English?
All right. Say rates are 6%. I'm just throwing that out there.
Okay.
You go to XYZ
Wait,
Bank.
So that's the rate right now? 6%?
No, I'm not even going to stop.
No. Don't be putting him on the spot. Look at him.
You see this?
You asked for it. I
didn't ask for anything.
All right.
So
You're at 6%.
So to say I'm at 6%,
Yep.
XYZ Bank 6%, and then Bank B is at 5.75.
Okay.
You're like, oh, crap.
5.75.
5.75 sounds
Bank B
amazing,
great.
right? Now you go to 5 places and everyone's at 6%, but there's one place that's at 5.75 and you're intrigued. You're like, all right, I want to go with this one at 5.75.
Okay.
You get the loan estimate, and a good loan officer would follow up with you from another place and say, hey, did you get the loan estimate? And you say, yeah, I got the loan estimate. Can I take a look at it? Sure. Have you built that relationship? Sure. The other loan officer looks at it and then sends you their loan estimate with the rate that's slightly higher, but you see your closing costs are $10,000 less. Now, what's worth more to you, the rate or the $10,000 in your pocket?
I don't know. I'd have to do the math.
All right, well, I'm going to give you a little secret here. If you're just doing a $500,000 loan, let's use that as an example, the difference in 0.25% is about $120 a month.
Okay.
So do the math.
Yeah.
12 months, it's 12, call it 1,200, we'll use $100, so $1,200. Okay. And now I'm saving you $10,000 real money right now. Real money, it's in your pocket. Okay?
$1,200 a year.
What?
$1,200 a year.
That's right. But you didn't pay $10,000 to get it.
Right.
Right.
And your home's appreciating in value. And you're paying down your principal balance. Who wins there?
It depends, right?
No, you're only thinking about the rate. You're not thinking about
I'm thinking
the
about
capital.
the extra $1,200 a year too. And if I actually take 30 years to pay off that loan,
You're
that's
not
a lot of
going
money.
to.
No, most people aren't going to do that.
You're not going to.
Yeah. What's
That's
the average?
short-sighted.
5-7 years, you said?
5-7 years. You're not going to.
Even at that, you might be even refinancing sooner.
That's
True
right.
story.
All of a sudden, we have this boop, drop of rate.
For most people, saving the $10,000 is going to mean more.
That's correct. That's what I'm
It's
saying.
going to mean more to you when you finally settle in and realize that.
That's really,
I'm just playing devil's advocate
yes,
here.
I'm just saying.
No.
But that's
No, but it's true. That was really great that you brought that up because think about it. In the moment, people are like, "Oh no, I
think people
want that rate."
hyper-focus on that. Yeah.
Yeah, they hyper-focus on whatever the rate is.
Yeah.
But they don't realize that until they have someone that educates them and breaks it down. So I think it's so important, consumers, to think about who you're going to talk to.
Yeah.
So interview lenders, interview people. They interview me all day long, right? Nobody thinks about interviewing a lender.
Isn't that wild? The person that's going to
blows
loan
my
you the
mind.
stinking money.
You're going to give all your financial, your account numbers, your social security. You're giving everything to a lender. But you're going to trust somebody online because they're flashing a rate.
Right.
But because guess what? When you meet somebody that you can connect with, you're going to ask them the questions. You're not going to ask any questions to the person that's flashing the rate. That you're going to do that. Oh, I just signed it. That's what you're going to do.
Right. I didn't read it. I just signed it.
100%.
They had a great rate. Yeah.
And you're going to lose out 100%.
Because at the end of the day, also to add to that is you're going to have another transaction down the road, some year, someday, and now you just did a transactional type transaction.
Yeah.
Where there's no face, there's no soul
and who do you
to
call?
it. There's no soul to that.
Right.
And then who do you call and trust?
Who do you call now?
You got to start all over next time.
That's right.
Yeah.
That's why I said there's two types of loan officers out there or lenders. There's transactional ones that just push paper, and there's ones that create relationships.
This is like a tenet of good business, I think, what you're describing. It applies across the board where people that are trying to build relationships and get good at that, they're going to create a long-term business.
That's correct. So
people that are transactional are just thinking about the short term.
So just to take this a step further, you guys are going to find this kind of staggering. For loan officers out there right now, last year, the average loan officer closed 1 deal a month. Average.
That doesn't sound very good to me.
No, it doesn't.
Doesn't sound like a living.
Now, also, when it came to licensing, like the federal license and your state licenses, over 60% of people who held licenses never renewed.
Wow. How long is the license good for?
1 year.
Wow, they dropped that fast.
Correct.
60%
So
in a year.
getting back to the transactional opposed to relationship-driven loan officers, the ones that focus on their partners, focus on their clients, focus on themselves to make themselves better at what they do, those are the ones that are thriving right now. So people who were basing their business on refinances and transactions are not in business anymore. People who focus on the purchase market, the players involved in the purchase market, those are the people that are still in the game and still doing very, very well because now that 60% of the competition is gone.
Yep.
So that gets back to transactional versus relationship.
100%. It's been a good shakeout with realtors from the same kind of thing.
Same thing.
You know, like when it got harder, when houses got a little harder to list, a little harder to sell, a lot of people dropped off.
Right.
And a lot of people think it's about not being able to work. They don't want to work. But it's really not. I mean, that's a piece of it, of course.
Sure.
But it's really about they don't know how to connect because at the time when it was booming and you didn't have to connect, you didn't have to connect.
Right.
And, you know, being in the business and you being in the business as long as you have in your field, it's like the amount of information that you want to share to people to help them because each transaction is completely different. Just like each house you go look at is completely different, even if it's in the same condo complex.
Yeah, no, that's what keeps it interesting.
So it's a person that can relate and provide that information is doing very well because that's why we're in the business for it. It's not about how many transactions we can do.
Right.
And it just organically builds.
That's right.
Organically.
Like the immense amount of gratitude that I feel on a daily basis.
Yeah.
Doing what I do, no dollar amount could equal it. Because I get a true joy. It's very hard to say that you enjoy what you do.
Yeah.
Right? I get a true joy out of helping people. Like when I did a lot of stuff, a lot of like soul searching, put it that way. And I started my gratitude journal. I started reading more. I started, sharing more and, just being part of my life. I would put it that way because sometimes you get lost in what you're doing and you don't really know who you are. You sort of lose track of that. So what I realize is that after doing everything that I've done, my true calling is to be a coach.
No, good.
So everything comes up, like anything that I do in finance, family, life, it always has to do with coaching. And I get the most joy out of coaching and helping people. So doing this and helping people achieve the American dream and working with such great people, like I'm so grateful for that because I love what I do.
That's great.
It's amazing. Like when you start figuring out like who you are and why you do what you do, what makes you tick. And it makes like our job is very, very hard. Like I always joke that if you like roller coasters, you'll love what we do.
That's probably 60% of them just like nope.
Yeah.
That's a lot of nopes in every year,
But the thing is, what's enjoyable is like when you get to that closing table and those people are so happy and they look at their new home and they're like, oh my God, look at all the memories we're going to have in here. We're going to build our family. We're going to do like everyone has something in their mind.
Yeah.
And you build that relationship, you build that rapport, you keep on checking in with them, you become friends with them. You're only going to build your business and you're only going to help them enjoy their life and they're going to help you enjoy yours. And that's like how I feel about this business. Like we're talking about all these things and I'm like, well, what drives me?
Yeah.
And it's like the gratitude in helping people.
Yep.
Tell me, let's know a little bit more about you on a personal side.
Sure.
I know that
I knew this was coming.
Oh, you were prepared for this.
No, I was
don't
not
know.
prepared, but I saw the look in her eye.
Okay. Neat.
Well, people, you're approachable in what you had said. And I think it's important that people see how approachable we are because, some people don't want to talk to lenders. They don't know how to bring it up.
Sure.
So I know that you love recreation. We're recreation people. We love the outdoors. What's your favorite outdoor recreation event or activity?
Depending upon the season.
Mm-hmm.
So in the winter, I love skiing. Skiing is my go-to. And what I love about it is being out on the mountain and feeling free with like the smell of the clean air, smell of fireplaces, the sound of you going down the mountain, it's just, and the sights that you see. Like we live in the Northeast, we know it's cold in the winter, but it's so beautiful in the winter too. And most people don't really enjoy what we really have here. So recreationally, skiing is my
is your go-to.
My go-to in the winter. I also play hockey.
I don't picture you a hockey player.
No, I don't.
I don't know, man. I've never played
picture you
hockey
a
on ice,
swimmer.
so I couldn't say.
No
swimming. Huh?
I swim, but I'm not a swim. I am a swimmer, but not a swimmer. But hockey, skiing, anything on the mountain. I want to try snowshoeing. That's one of the things I want to try.
That's cool.
Or do some skinning as well. I want to do that.
Skinning?
Skinning.
Oh, you don't know what skinning is?
No, I don't know what this is. I picture like skinning an animal. What are you talking about?
We'll bring you there.
So skinning is you put these skins, which were seal skin back in the day, and you still can get it.
Yeah.
But you put it on the bottom of your skis, and you walk up the mountain.
Then you peel the skin off, put it in your backpack, and you ski down. So it gives you the ability to just go anywhere, backcountry or whatever.
With your skis on?
With your skis. Yeah. So it's like kind of like your cross-country skiing.
So the binding allows you to lift your heel up as you're
around,
walking.
Mark.
Dude, I've never heard of this. So like you can actually get enough traction with seal skin.
Yeah, because
to climb a mountain.
Yeah, because it's
with
a seal fur. So if you go the opposite direction of which the fur is going, it stops. Yeah.
Whoa.
What a workout that is.
That's got to be a crazy workout.
You start peeling off layers. It's like 5 degrees outside and you're sweating profusely.
Yeah, you must be in a t-shirt.
So think about it. You have no limit where to go. You want to go to a mountain. You don't want to buy a ticket. Whoosh, hike up there or get a ride. A lot of people skin up Wachusett. They'll skin up and ski down.
I never heard of that.
I see it in Vermont all the time. Like Stowe has like a club that you wake up around 4:35 in the morning.
Skin up.
And they skin up and then ski down.
I'll be Googling this later. A, to make sure you guys aren't just messing with me. And B, just that sounds wild. Like I've never heard of such a thing. So you can do that with downhill skis, not just cross-country skis?
Yeah.
Well, it's a certain binding.
It's a downhill ski, but with a certain binding.
Yeah.
Okay.
It's a certain
binding. That makes more
sense.
sense.
And if you want to skin and
different
you don't
boots?
have, no, you can use the same boots. But if you want to skin and you don't have your the right equipment, you can rent it.
Yeah.
Really?
Give it a shot.
And give
we
it a
should try it.
I think I should.
We should.
That sounds really cool. Okay.
Yeah, we should do it.
Have you done this?
I haven't skinned. My son has a split board. So he's a snowboarder.
Okay.
So it splits. He skins up.
What?
Puts his things, flips the board back in, and
Dude, this is like a whole world I did not
it's a
know
whole
existed.
World. Yeah.
That's so cool. I'm glad you shared that.
Yeah.
The other thing you were telling me out there was that there's an indoor ski, what would you call it? Slope facility?
Yeah. In New Jersey. It's called Big Snow. You can look it up.
Big Snow.
Big
it's indoor skiing.
With
in
a chairlift in a mall.
Like I thought he was kidding. I'm like, what are you talking
You
about?
laugh about it.
Right? Like,
wait, do adults do it or is this a kid thing?
No, it's yeah. There's 2 runs.
Wow.
2 things I got to look up because I'm still like, wait, are you guys messing with me? But
It's 30 and balmy in there.
Oh, wow. That's wonderful.
wild.
Yeah, it's fun.
I want to thank you so much. You brought a lot to the table, much more so. My thought process went a whole different way with you.
Oh.
Mark brought us down to another, of course, always another.
Second mortgage.
Yeah.
Secondary market.
Always brought us to something else. But no, really, information is phenomenal. So thank you for joining us. We're Real Estate Tips, Mark Fratoni, Lana Copsala. We're going to give you our information at the end. But Yale, where can people find you?
Sure, you can find me. You can Google me, Yale Wolf, Guarantee Rate Affinity. I always tell everyone to Google me. That way you know who I am.
Good.
Also, you can reach me at yale@grarate.com. Or you can just find me on the Guarantee Rate Affinity website as well.
You have any Instagram, any social media?
I also have on Instagram, follow me at Lender Wolf Mortgage. Also on TikTok, Lender Wolf Mortgage as well.
Great.
And you'll love my videos. They're pretty cool.
Yeah.
Cool. Thanks
great.
for coming in. Much appreciated.
Thank you. I appreciate
Very
being
good.
here.
Very good. Good information. So I hope you guys subscribe. Please let us know if you have any other suggestions for guests.
Yeah.
We'd love you on. But if you would subscribe, we'd love it. Or reach out to us and we will have our contact information at the end of this. But you can always find Lana Kopsla at Coldwell Banker Realty in Leominster, and Mark.
Wachusett_inspection at Instagram is the best place to find me.
Perfect. Okay. Thank you.
Thank
Cheers.
you guys.